The man who bet on India. When India didn't believe in itself. In 1985. Mumbai. A 25-year-old boy walks into a broker's office at Dalal Street. No job, no salary, no backing, no safety net. His father, an income tax officer, had given him exactly one condition before letting him enter the market. You can go, but never ask me for money. And never ask my friends either. That boy had 5,000 rupees in his pocket. That's all he had. On that day, the Sensex was sitting at 150. By the time he died, 37 years later, that 5,000 rupees had become over 40,000 crore. Not by getting tips, not by having connections, not by being lucky, but by understanding something about markets and about himself that most traders spend their entire lives running away from. This is the story of Rakesh Jhunjhunwala, the big bull of India. And hidden inside his life are the exact psychological truths that separate traders, who build wealth from traders, who just chase it. Stay with me. This one will change how you think about markets. Permanently. No exit. The first psychological advantage. Most people hear the 5,000 rupee story and think, what a humble beginning. They miss the real point entirely. The real point is not the amount. The real point is what that amount meant. He had no exit. His father would not fund him. His father's friends were off limits. Psychologists call this commitment by elimination. When you remove all exits, your brain stops looking for them. It redirects every unit of mental energy toward making the one path work. Most retail traders keep one foot outside the door. And that exit, that small, comfortable, always available exit, is precisely why they never fully commit. Jhunjhunwala had no such luxury. He once said, and this is one of the most honest things any trader has ever admitted publicly, you do not succeed without obsession. Not discipline, not intelligence, not strategy. Obsession. The kind of obsession that only becomes possible when there is no comfortable alternative waiting for you. Tata T. The first win, and why it nearly destroyed him. In 1986, just 1 year after starting, Jhunjhunwala bought 5,000 shares of Tata Tea at 43 rupees per share. 3 months later, the stock was trading at 143. He made over 5 lakh in profit. For a 26-year-old, this was not just a trade. It was proof. But here is the moment that most traders get catastrophically wrong. The first big win. Most people change their identity overnight. Suddenly they are a genius. This is the euphoria trap. Jhunjhunwala did the opposite. He treated the win as confirmation of a process, not proof of an ego. He kept studying, kept doing the work, quietly, every day. And he understood something that takes most traders decades to learn. Losses humble you, but wins corrupt you. The trader who can stay grounded after a big win, that is the trader who will still be in the market 20 years from now. He once said, prepare for losses. Losses are part and parcel of the stock market investor's life. Already preparing his mind for loss. That is the psychology of a professional. Harshad Mehta, the near wipeout, the biggest fortune of his career. In the late 1980s, the Indian market was being driven by Harshad Mehta. Prices were going vertical. Valuations made no sense. Jhunjhunwala looked at those valuations and made a decision. He went short. He bet, with full conviction, that the rally was artificial. That gravity would win. The market stayed irrational far longer than he expected. Every day the market went higher. His short positions bled more. The psychological pressure was immense. Because being short in a rising market doesn't just cost you money. It makes you question your own judgment. Jhunjhunwala held. He later admitted, if Harshad had held his position for just a few more days, I would have been finished. And then, in April 1992, the scam was exposed. Mehta's artificial bull run collapsed overnight, and Jhunjhunwala's short positions turned into one of the single biggest profits of his entire career. He was right. The market told him he was wrong for months, and he held his conviction because his research was solid. That combination, directional conviction with timing patience, is the rarest and most valuable edge any trader can develop. Titan, 20 years, 7,000 crore. What patience actually looks like. In 2002, Rakesh Jhunjhunwala started quietly buying shares of Titan Company. Nobody was excited. The stock was beaten down. He bought anyway. Then he kept buying, patiently, methodically, for nearly 2 decades. Every time the stock corrected, he checked his thesis, not the price. The thesis. Has anything fundamentally changed? No. Then I stay. He once described his investment philosophy in 5 words. Buy right, sit tight. 5 words. 20 years. A position that grew to over 7,000 crore. But sitting tight is not passive. Sitting tight, while a position corrects 30% and your peers are questioning you, that is one of the hardest active disciplines in trading. Because your brain is not built for inactivity under pressure. The trader who can override that instinct is operating from a completely different psychological level. He said, I would not say there is no emotion when you invest, but they are not emotions you won't be able to part ways with. He did not claim to be emotionless. He claimed to be unattached. There is a profound difference. The India story. 37 years of non-consensus conviction. From the very first day, Jhunjhunwala held one belief. He believed India was going to be one of the great economic stories of the 21st century. In the 1980s, this was not obvious. Growth was slow. He looked at the same country everyone else was looking at and saw something completely different. He saw 1.3 billion people moving toward aspiration. He called it the India story. And he said it publicly, repeatedly, for 37 years. Even when the consensus turned negative. In psychology, this is called non-consensus conviction. The ability to hold a strongly reasoned view that directly contradicts the majority. This is the rarest psychological trait in markets. Because the human brain is wired for social conformity. Jhunjhunwala stood apart for 37 years. The crowd eventually caught up to where he had been standing all along. August 14th, 2022. What he left behind. On August 7th, Akasa Air operated its first commercial flight. Rakesh Ji was there. He had co-founded the airline, had backed it when every skeptic asked why. His answer was the same. Post-pandemic India would fly. He flew on that first flight, watched his latest bet on India become real. 7 days later, the day before India's 75th Independence Day, he passed away. He was 62 years old. He died with an active portfolio. He traded because markets were never about money for him. They were about the game. The daily discipline of understanding the world more clearly. The quiet satisfaction of a thesis, held with patience and conviction. Here is what his life ultimately teaches. Not a trading tip. A mirror. The market will test your patience. It will ask you, do you actually know what you own? And why? Or are you just hoping? Conviction built on homework, patience built on thesis, obsession built on process, and a relationship with uncertainty that is not built on fear, but on the quiet, unshakable understanding that the market rewards those who do the work and wait. He once said, "If I have any emotions, they are for my children, my wife, not for my stocks." That is the 1%, not the number, the mindset. See you tomorrow.